Have you ever watched a stock quietly climb while everyone else is panicking? That's exactly what SoFi just did. In the middle of a volatile market, where inflation fears, interest rate uncertainties, and geopolitical tensions dominate the headlines, SoFi Technologies is defying the chaos, and today we're going to unpack why. Whether you're a long-term investor or someone just keeping an eye on the fintech sector, you'll want to hear this full breakdown. Because there are some massive signals you shouldn't ignore. Hello everyone. Welcome to Daily Stock Update. If you're new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. Let's start with today's action. SoFi closed up roughly 1%, ending the day around 13.30 cents. On paper, it might seem like a modest gain, but context is everything. On a day when many growth stocks were getting dragged down, SoFi actually managed to push forward. The price fluctuated between a low of 12.86 cents and a high near 13.32, all while trading volume remained relatively muted at about 60 million shares, just slightly below its average of 63 million. But here's what makes it interesting. Fridays are typically quiet for trading, yet SoFi quietly showed strength in a very choppy environment. One of the catalysts for today's upward momentum. A fresh press release early this morning from SoFi's team. They announced their participation in two major upcoming conferences. First up, on June 4th, SoFi will be featured at the 45th Annual William Blair Growth Stock Conference. Then, on June 10th, they'll appear at the Zootech Conference. In both instances, CEO Anthony Noto, a familiar face in these types of events, will be representing the company. Now, historically, something odd happens every time SoFi participates in these fireside chats. The stock often closes in the green. Is it coincidence? Maybe. But patterns are patterns, and savvy investors are definitely taking note. In addition to that announcement, after-hours trading brought another update, this time results from their recent shareholder meeting. All proposals passed without much resistance. The board was re-elected, executive compensation was approved, and the accounting firm retained. Nothing earth-shattering, but it does provide a sense of stability and continuity at a time when that's in short supply across many companies. Now, when we zoom out and look at the fintech sector as a whole, SoFi wasn't alone in its green performance. Names like Robinhood and Upstart also posted gains. Why? A big part of it ties back to positive macroeconomic data released earlier in the day. The PCE index, a key inflation measure, along with University of Michigan's consumer sentiment data, both came in stronger than expected. That's good news for the economy, but not necessarily for rate cuts. In fact, current data suggests there's only about a 55% chance we'll see a 25 basis point rate cut at the September 17th Fed meeting. That's lower than many had hoped, and explains the muted movement across the broader market. Still, somehow, SoFi carved out a win today. Part of that resilience may be due to its solid fundamentals and increasing investor confidence. But the political environment is throwing wild cards into the mix. For instance, President Trump made headlines again, this time suggesting a possible doubling of tariffs on steel imports, potentially hiking them to 50%. That kind of aggressive trade stance could cause global market jitters, especially if China retaliates. We could be heading into a weekend filled with diplomatic tensions, and if things escalate without a resolution, expect a volatile Monday. So how are the short sellers reacting? Interestingly, not much at all. The latest data shows a tiny increase, only about 569 more shares added to short positions. Total short interest stands at 13.69% of the float, which equates to about 148 million shares. Despite some bearish sentiment in the options market, with nearly 48% of today's contracts being bearish, short sellers haven't aggressively ramped up their positions. That's likely due to SoFi closing at a level where they neither felt pressure to cover nor incentive to attack. Looking into the options data, we saw $7.57 million in call options versus $4.67 million puts. What's more telling is the open interest. Around the $13 strike, there are about 8,000 contracts which have now moved into the money. At the $13.50 level, there's a big cluster of interest with over 22,000 contracts. Had SoFi closed any higher, especially above that $13.50 zone, we might have seen a short covering rally. But since the stock settled comfortably in the middle, the bears sat tight, and the bulls didn't get a breakout yet. From a technical perspective, SoFi is doing some interesting things. It's currently trading above a key pivot point of 13.23 cents, which is a positive sign. The next big test, the 13.66 resistance level. If momentum carries into next week and that level is breached, the next leg higher could be initiated. Also, we're seeing a wedge forming between the 100-day moving average and the ALMA, Adaptive Long-Term Moving Average. Typically, this kind of setup results in a strong breakout or breakdown. My bias, I'm leaning bullish. The trend has been showing higher highs and higher lows, which is textbook uptrend behavior. Now let's touch on a new development from the analyst community. A report surfaced today from Seaport Global featuring a hold rating on SoFi. No massive upgrade or downgrade, but interestingly, the analyst behind the rating, Gill, has historically been bullish on growth stocks. The market didn't react heavily to the report, possibly because the sentiment was neutral overall. Still, it's worth watching whether Seaport adjusts its stance in the coming weeks. In terms of momentum, SoFi is getting close to the 100-day moving average, which could act as a launch pad if bullish pressure continues. As it stands, SoFi appears to be caught between major moving averages, and whichever side breaks first is likely to dictate the short-term direction. So what's the takeaway? Despite macroeconomic uncertainty, rising trade tensions, and a volatile rate environment, SoFi is holding its ground and building strength. The company's fundamentals remain solid. Upcoming events could act as catalysts, and from a technical and sentiment perspective, it feels like the stock is coiling up for a move. It may not happen overnight, but all signs are pointing toward a potential bullish breakout, especially if it holds above the 13.23 cent support and challenges the $13.66 ceiling. If you're thinking long-term, here's my best advice. Don't try to time the exact bottom. Nobody does it consistently, not even the pros. Instead, look for companies with strong fundamentals and consistent growth stories. Then, dollar-cost average your way in. That's how real wealth is built. You don't have to catch the absolute low, you just have to catch the long-term wave. SoFi, in my opinion, remains one of the most exciting fintech stories out there. It's transforming how consumers engage with banking, investing, and personal finance. And despite market headwinds, it's quietly climbing, one day at a time. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.